Good afternoon, everybody, and welcome to our Broker Moves review for Friday, December 4. My name is Carl Capelingua. I'm the market analyst over here at Think Markets. It is a pleasure to be with you on our weekly delve into price target upgrades, downgrades, ratings increases, decreases from Australia's and really around the world's biggest brokers. Before we do that, we'll talk about the Think Markets difference, which is substantial. $8 flat rate trades, of course, doesn't end there. Your own holder identification number, unlimited phone support. They are just three fantastic reasons why you should choose Think Markets before your next ASX share trade. The agenda for today, as I said, we'll have a look at all of the key broker moves from during the week and some ASX stocks of interest. We'll kick off today by talking about the upgrades during the week. So each broker has a rating. It can range anything from sell all the way through to buy, to strong buy, and different variations in between. Neutral, equal weight, all different ways of presenting what they think investors should do. So an upgrade is when we are going from a lower rating, for example, on Breville Group, neutral, to a higher rating, for example, outperform. Or it could be you're going from a sell to neutral. Either way, the broker is upgrading their stance on that particular stock. So let's have a look at today's upgrades. As I said, Breville Group there from neutral to outperform. Also a price target increase by about $1 there from 26 to 27. So brokers tend to have target prices where they think the price can get to, typically over the next 12 months. And we'd see a 3.8% increase in the target. Now, note also the distance between the current price of Breville to that target price is about 8.8%. That gives you an idea of some of the potential upside left based upon the broker's recommendation. Okay, moving along to Domino's Pizza. They came out with a trading update during the week, generally well received by brokers. We can see three upgrades here. Jefferies from underperformed to hold, Macquarie from underperformed to neutral, and UBS from sell to neutral. So what does that tell you about what brokers were thinking about Domino's pre the update? They look a little bit bearish. I think in most cases, brokers do like the stock. They do like the growth prospects. They just don't like the valuation and hence some of those ratings. We did see a substantial increase from Jefferies in their price target increase to $65.50. Now that's up from $50, 31% increase, but it is actually below where the current share price is. So I think they're just playing a little bit of catch up there. We've got a price target of $72.10. That's a little bit close to the current price from Macquarie and 72 from UBS. Okay, moving on to Kogan. They said they're going to acquire New Zealand online retailer Mighty Ape. So they got an upgrade from Credit Suisse from neutral to outperform. Credit Suisse also increasing their price target and seeing a little bit of extra upside there to the current price of about 14.4%. Sandfire Resources, neutral to outperform with a nice price target increase from Macquarie, but noting that their target is actually a little bit higher than where the current market price is. Treasury Wine Estate, definitely in the news this week. We're going to talk a lot about this in today's presentation. They got an upgrade from Credit Suisse from neutral to outperform and a price target increase as well by nearly 30%, and that target of $11 is still showing some upside from the current share price. You can see Treasury Wine Estates featuring there. Let's go there now, because apart from that one upgrade from Credit Suisse, 1, 2, 3, 4 downgrades. So from buy to sell, from Citigroup, buy to hold at Jefferies, neutral to underweight at JP Morgan, and UBS went from buy to neutral. So notching down many of those ratings on the back of China imposing, quote unquote, a tariff on Australian wine exports into China. I say quote unquote tariff because it's a temporary sort of surcharge that they're doing, and most analysts have said that for all intents and purposes it's a tariff. It is temporary, and that is they are in the process of doing this anti-dumping investigation. That is Australian wine exporters dumping supply into China. We don't know how that's going to end. It'll be a few months until we find out, but in the meantime, brokers have responded with pretty negative outlooks for Treasury on that basis. And we'll talk a little bit more about that later on. But just noting GPT also downgraded their outperform to neutral, but a price target increase from Credit Suisse. Santos from outperform to neutral as well, and a small price target increases there as well there. In many cases, some of these stocks have run very well, and brokers sort of changing their recommendations based upon the fact that there's less value potentially seen in the share price at the higher levels. Macquarie Group, Temple and Webster from outperform to neutral, but a slight target increase also. On that subject of price target increases, so no ratings changes on these, just price target increases. Obviously, there's a large number to get through. I won't go through them all individually, so press pause on the recording and have a look to see if your stock or a stock you're interested in is on screen. Interesting ones, well, Champion Iron got 3, and they are from, 3 Canadian brokers. So this is a dual-listed company. It's listed here and on the Toronto Stock Exchange. So some nice increases there, around about 10%, and then 30% from RBC Capital Markets. Outperform rating from Raymond James. Other than that, some of the cyclicals, we can see CSR doing pretty well. Downer Group, one of those cyclicals as well. GrainCorp also featuring, and some of the retailers. So I can see Harvey Norman and JBH getting increases also. We'll talk about Afterpay. That was up the top. We'll talk about that in a second. Kogan on that announcement also getting a price target increase. Metcash got a couple. Qantas got a couple of sizable ones, so 30% price target increases from Citigroup and Morgan Stanley. A little bit of upside seen in that share price still. Resources sector featuring in a lot of upgrades as well. So Rio Tinto got a couple, South 32 in there, Sandfire, Santos, Cenex Energy, and the list goes on in terms of resources, that is mining, metals and energy stocks. Worley Parsons, we'll talk about that a little bit later on. They had an Investor Day briefing and they got 3 price target upgrades as a result. And Zipco got a small bump from UBS. Okay, having a look at the price target decreases, not so lucky this week. Nickel Mines down, but there, if you scroll back, there is actually a price target increase from Citigroup from Nickel Mines and Macquarie, ratcheting it down slightly, but still 16% upside in the target price there, and an outperform rating from Macquarie. On the stock, Origin getting a small tweak down. The rest of them, to be fair, are small tweaks down, and in most cases, brokers are seeing upside to the targets, or really even still having buy recommendations. So Select Harvest, SSR Mining, Treasury Wine Estates brokers still overall positive, but making small tweaks in price targets. Okay, stocks in the news this week and featured in the broker rumblings. We've got Afterpay. They came out with a November sales update. They said they basically, in this November, doubled sales compared to last November, topping $2 billion for the first time on a monthly basis. In the US, their operations in particular were doing very, very well. And for the first time in the company's history, US revenue actually exceeded Australian revenue. So it was if you looked at the headlines, a fairly good result. I will go now to the UBS broker move because they were quite circumspect about that seemingly very good result. And they said that the November sales result actually created more questions for them than providing answers. And they noted that compared to previous sales updates from the company, they didn't have very specific data on customer numbers. They did mention customer numbers of quote unquote around 1 million in the US, but they didn't talk about Australian, New Zealand or UK customer numbers. They didn't talk about credit margins. I mean, I follow Afterpay very closely, and I do know for a fact every update they put out, they tell you what their margins are doing. That is the small sliver that they make on their credit transactions. And costs as well. So it was, more interesting for what it left out than what it actually put in. Having said that, UBS is particularly bearish on the stock. They've had a sell rating basically from the start on this one, and their $30 price target is only about $70 beneath where the current price is. Looking at brokers who are a little bit more upbeat on Afterpay, Goldman Sachs raised their price target from $94.40 to $99.90. So you would have thought they could have just rounded off and gone 100, but no, they're very specific, $99.90. They said the numbers were pretty impressive, obviously more than double from last year. They noted that significant outperformance in the US. They said Black Friday and Cyber Monday performance was pretty good. And they increased their expected sales for FY21 now by 6.8% on those numbers. They're monitoring the impact of increasing competition, particularly Sezzle in that space. Morgan Stanley, they retained their overweight rating. They retained their $120 price target. They are, as far as I know, the most bullish of the brokers out there. Well, actually not, because we'll see in a second. Somebody's got a 140 out there, but certainly Morgan Stanley, one of the more bullish brokers on the stock. They looked at the November sales numbers and they were ahead of the brokers' expectations. They said some of that was due to Cyber Monday falling also in November. So quite often you see the Black Friday and Cyber Monday fall, one in November, one in December. This year they were in the same one, so maybe that gave them a bit of a boost. But otherwise they said they thought that operations were on track. If you look at the consensus for Afterpay, 3 brokers are presently with a buy, strong buy, I should say, 4 with a buy, 4 holds, and 1 sell. Guess who that is? Right here, UBS. In terms of the price targets, interesting, a 30.09. I'm sure that's UBS as well. Mean target of $100, which doesn't give you a whole lot of upside, about 4% from the current price. In terms of the company's fundamentals, this PE is probably what UBS is a little bit worried about 800 on a 1-year basis and 200 if you go out the next year. So, it could take years until this stock is on a PE where value investors would consider it. No dividend at this point in time, so it is a little bit of a leap of faith. In terms of the technicals, they still look pretty sound. It's one we have covered a number of times in Think Technical. I think we started covering it in the mid-50s, if I'm not mistaken, around here as a buy. We've reiterated buys throughout the process. I haven't covered it recently, but I will say right now, looking at the technicals, it is still fairly strong, but I would be watching this pennant pattern very closely. A breakthrough here, I think, wouldn't be very, very positive. I think you would target into that 80 level, so that's a significant decrease in percentage terms from here. For me, I'm bordering on taking some profits off the table, and there's nothing wrong with potentially taking profits on 50% of your position, hanging on to the other 50%, or having some sort of percentage-based skew, depending on your own personal outlook. So look, I wouldn't call it a buy from my own personal perspective based upon those technicals. It's more of a hold, and I'll let you decide whether you want to take some profits on it from there. Okay, Treasury Wine Estates. We'll talk about the technicals in a second, but it was well covered by the brokers. Some price target upgrades and downgrades, ratings upgrades and downgrades, as we saw. So brokers fairly mixed. Most of them quite cautious on the stock, but optimistic as well, in that the company may well be able to find other avenues to growth around the region. China, it's pretty major for them, about 30% of their sales. So it will be hard to replace those in the short term. The company has said, well, maybe they'll source some of the grapes from China to alleviate some of these concerns of the Chinese regulators. So fairly dynamic space. We'll obviously keep an eye on that. Look, I'll let you press pause. I think we've covered this one pretty well up to this point, and read those comments from the brokers. We'll talk about the consensus. It's still a buy, so 4 strong buys, 3 buys, 1 sell, and 6 holds. Their mean target around about 10.55. So generally, brokers seeing some upside in the price from here. Current price, as you can see, 8.76. Top range of estimates up to 15, I should say, and the bottom range around about 8. In terms of the company's fundamentals, I'm not sure how up to date these are, given that we've only seen that announcement made on Monday. So maybe the brokers haven't had a chance to go in and just change some of those cells in their spreadsheets on this one. Taking it on face value, you wouldn't say the stock was even very cheap, even at these levels. A 23 odd PE and then 20 a couple of years out. Not that cheap. The dividend yields, you might even have to put a question mark on that going forward as well. So I think the chart reflects the fundamentals. Fundamentals are uncertain, and this very well-established downtrend doesn't look like it's about to change anytime soon. Certainly there is some support around this $8 level, and as long as the stock holds above that, maybe there's some potential for it to continue to bang against this downtrend and form a basing pattern, which could then lead to a turnaround. Until the price gets above that long-term downtrend, there's not really much I can do about it from a technical standpoint. I certainly won't tell you to buy until we see it move above that level, come back, retest that level, and then look to bounce off that level. So a long way from a buy for Treasury Wine Estates from me anyway. Have a look at Worley Parsons. This is one that, if you fast forward maybe for Treasury Wine Estate, after a period of time where it can base underneath this resistance zone, move above this zone, and then start to go again. That's when you're looking to get involved. So, sort of around here or even around here. Incidentally, it's right there that we featured it in our Think Technical section. So definitely hit up the market news section of the website, tune in for Think Technical. We called it a buy there. It was, 10, high 10s. So now at 13, looking like a pretty good call at this stage. Happy to stick with it at this point in time. There's nothing in the chart that wouldn't suggest to me that this one won't continue to go up. Would be good to see the long-term trend turn up in the near term. However, having a look at some of the broker moves, as we suggested earlier, there was an investor day briefing. Most brokers quite positive towards the stock. A little bit cautious though, because the industry within which it operates, obviously the mining services and particularly the energy sector, it's still got a long way to go to recover from the pandemic. Having a look at the consensus, we've got a buy, 2 strong buys, 5 buys, 2 holds, just the 1 sell. In terms of brokers' mean estimates, 1232 is about where we are right now. So that's interesting in itself. High end is still at 1570. In terms of the PE, the stock is, you wouldn't call it expensive, you wouldn't call it cheap either. The PEG is very high, indicating that it has struggled with growth in the past. The dividend yield is quite attractive though. Technical basis though, as I said, still looks good. Okay, that's it for me today. You can catch all the updates at our market news section of the website. You can follow me on Twitter. All the Think Markets handle is there as well if you like. And on Monday, we'll be reviewing this week and all of the moves for next week in our weekly Think Tank. And then on Wednesday, we'll do our Think Learning, how to value a stock. The disclaimer before I leave you today says that everything we've discussed is general advice. Don't forget, Think Markets is a regulated Australian broker. We do have some products that could see you lose more than your deposit. So make sure you understand all of these risks. Give us a call or check the website for further details. Okay, all the best for your trading. Until we catch up again, bye-bye for now.